Good morning, and welcome to episode 209 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, January 29th, 2025. We're going to break stride with tradition here. No numbers today. I'm not going to comment on the markets in general. I want to talk about one thing, though. I want to talk about gold ownership through exchange-traded funds. ETFs. We did a recent survey here to our readers, and we found out that about 35.2, a little over a third of them, 35.2%, said that they like exchange-traded funds or ETFs to buy gold and silver. And I got to tell you, I think that's a really bad idea. I'd like you to go ahead and send me your comments and thoughts. Let me know if you do that and why you think it's a good idea. But I'm going to tell you why I don't think it is. First off, you own no gold. That's the biggest thing. You own shares in an offshore trust whose fund manager's job it is to mimic the gold price. You don't own any gold, not an ounce, not a fraction of an ounce. The price is always a bit off. Okay, so if you look at, say, GLD, one of the most popular gold ETFs, it's typically supposed to be 1/10 of the gold price. It virtually never is. SLV, one of the most popular silver ETFs, is always supposed to be 10 times the silver price. It almost never is. Why? Well, the fund manager actually has something to manage, and he or she has to deal with real-world practical limitations. For instance, let's say all day long people are buying, selling shares of ETFs, GLD and SLV, and at the end of the day, the fund manager has to buy 50 ounces of gold and 5,000 ounces of silver in order to settle everything out. They can't do it. They flat out cannot do it because the bullion banks won't buy or sell anything less than 100 ounces of gold or 10,000 ounces of silver at a time. So that fund manager has to look at the market and say, you know what? I need to buy 50 ounces of gold and 5,000 ounces of silver, but given where the market is, do I want to buy 100 ounces and 10,000 ounces and go long early ahead of tomorrow, or do I want to go ahead and not buy anything and stay short and see what happens tomorrow? So again, never quite going to be the same. They're trying to mimic the price as best they can. The last thing I'll warn you is if you haven't read the prospectus for your ETF, my God, you need to. Okay? When you dig down into the minutia, what you will find is those offshore trustees I mentioned earlier, they are incredibly well protected. You, the shareholder, are not. You, the fund holder who owns shares in that fund, are not protected. Read the prospectus, know exactly what you're getting into. Then if you choose to go into it, fine, but at least you know how well they are protected and how well you are not protected. In the end, why buy a proxy when it is so easy to buy the real thing? It's so simple, and if you don't know how, just call us. Toll free, 800-831-0007, and we can walk you through it. We've been doing this for 42 years, making gold ownership easy, and it is easy. If you don't know how to, find out. It's not that hard. Don't resort to an ETF just because it's convenient. There are better options. You can own physical gold. I don't want you to find yourself in a position when things go to hell in a handbasket and you need gold. Not dollars and fiat, you need gold, and you go to put your hands on it and you can't. Because when you redeem that ETF, that's what you're getting. You're getting that mismanaged fiat. You need gold, own gold. So as always, I want you to go ahead and follow us on the YouTube channel, like us, send us your comments, follow us on social media, take our twice weekly, always something interesting alerts and our once monthly information line newsletter. But in the end, don't ever forget that getting rich starts with keeping what's yours.